Silver Dave here, and today I want to talk to you about something really interesting. That is the relationship between gold and oil. So what's the relationship between gold and oil? Well, let's find out. People call oil black gold. And you may wonder, why is it called black gold? Well, the reason is quite simple. It takes oil to produce gold. And you might be thinking, yeah, but the future we won't need oil to produce gold. And I'm gonna tell you, that's probably not gonna happen in our lifetimes. And there's quite a good reason why. So, when you think of oil, most people think about, gas. Gas in their cars. I'm gonna bring up my pencil again. Okay, so they think of this stuff, right? The things they'll use to fill up their Lambos. And they're not wrong, but that's only part of oil. When oil comes out of the ground, it comes out in the form of crude oil. So it's this stuff here, crude oil, not this stuff here, right? When it comes out, it's black. You can't, if you try and put that in your car, you'll break your car. So a barrel of crude oil is made up of multiple types of oil. About half of it, so in a 42-gallon barrel, that's a typical barrel size, you have about 20 gallons of gasoline, which is gas that you put into your car. Then you have jet fuel. These are things that most people think about, right? The stuff that goes into planes and the stuff that goes into cars. This makes a little bit more than 50% of what's in fuel. Then you have about 6% that goes into other products, and they list this as other products. You're like, what's other products? Well, dinosaur juice is made up of carbon and hydrogen atoms. And things that we use every single day, plastics, are made out of carbon and hydrogen atoms. The other part of crude oil, and around I would say 6 gallons out of the 42, so 1/8 of it, is used in making plastics, rubber, and modern synthetic materials, right? So that part is another part of crude oil, and that demand will not change with electrical vehicles, right? You can remove 3 of these electrical vehicles, and even electrical vehicles do use these plastics. So the plastics demand will not decrease. And finally, so this is the part that concerns gold, is there's a whole segment that makes up about, I would say, almost 15 gallons out of the 42. Right, we're looking at about a bit more than a third, a little bit like 40% of it is distillates. It's fuel oil. You're like, what's fuel oil? Well, fuel oil is what's been used to generate electricity. It's what you use to run large machinery, like in the form of diesel. It's what you use to run factories, like a lot of factories use fuel oil in their furnaces for metallurgy and so on. A lot of houses use fuel oil for heating. So there is a whole segment, around, I would say 30 to 40% of oil that is not even related to the EV market, right? And even if in the future, we do have less demand for gasoline, this demand out of the crude oil barrel won't necessarily change because, even electrical vehicles use a lot of components from fuel, from a crude oil. So what we're concerned about actually in the production of gold is really this part, the middle, the distillate part. And it's good. This video is going to be quite short because it's really, really simple. This part makes up diesel, electric generator, like fuel and so on. And it's pretty much what's needed to produce gold. Now, there is a relationship between this type of oil, not necessarily the overall crude oil. Overall crude oil depends on all these markets, right? But the specific fuel oil part and the mining of gold and production of gold as we know it, that is refined gold, It's almost directly correlated. And what I've been noticing over the past, like I would say since November, is the price of diesel has been rising. And diesel is used in heavy machinery. It's used in, if you have a conveyor belt, a washer that's running on the field, like separating gold from rocks, you're going to be running that on diesel. You're going to be running the diggers and your shovelers, they're going to be running on diesel. If the price of diesel rises, and the price of, you will see a little bit in the price of crude oil rising, but if the price of diesel rises, then you will have a higher cost for the production of gold. Now, miners who are relatively efficient will probably stay in business. Miners who are not as efficient might, I have to turn that off. Miners who are much less efficient, well, they might not be able to stay in business and they might have to exit the market. I'm gonna close that. And so what's next? Well, I think that, the price of fuel oil in the midterm, I've looked at a few graphs. I looked at a few graphs in over the months, and I've seen that fuel oil has been rising in price despite, there's a pandemic. And the main reason why it's been rising in price is because, well, most of the stuff, we're not traveling as much, we're not flying as much, but we are definitely making, consuming goods, right? Consuming goods between factories and plastics. And China is the major producer for, for basically plastics and consumer goods, and their factories have been gobbling up crude oil imports since, I believe, since March or May, and they've been stockpiling and buying up all this crude oil, specifically mainly because China consumes the second most oil after the United States. But the main difference is, if you look at this barrel, China actually consumes most of this half, right? Let's do this. This is China. This part, gasoline, and that's not, this part that's gasoline, that is consumed by the United States. And so if China's importing more oil, right, to be refined and then to use this part for the production of goods that everybody's consuming, you're at home right now. You're like, oh, I want to buy something off Amazon. Well, what's that? Which part of the barrel is that going to dip from? Well, that's going to dip from this part, right? This whole section. And then it's going to drive the cost of production up. This is an upward pressure on the price of gold. If you increase the cost of mining for gold, for silver, for platinum, it's going to put some miners out of business. And if those miners go out of business, it will have a decrease on the supply. And I'm not saying that necessarily we're going to see more and more supply, but relative to the price of gold, like if the price of gold rises, of course, we will see more miners come online. But if the price of gold rises and the price of oil also rises, then that's a continuous self-feeding upward cycle for the price of gold. And I do think when I look at oil inventories, right? Oil inventories have been on the decline despite, that the fact that oil prices are stuck in the $50 range. And if oil barrels are on the decline and they're consuming oil specifically for manufacturing, it will also increase the price of oil and the price of production for gold too. And that is good news for stackers because you already have gold. You don't need to go and mine it. It could mean that in the future though, also something we could see is even though the spot price of gold is at a certain level, because to make physical gold it costs more, we might see actually the price of premiums starting to shoot up more and more, and premiums run ahead of actually the spot price. Anyways, that's today's video between the relationship between gold and oil, and it's a really simplified version. It's not a complex version of, there's other stuff going on in the background usually between gold and oil, and the relationship is much more complicated. But this is a dumbed down, very simple explanation of like how oil can affect the price of gold. And silver too. Silver is also part of this. Platinum, copper, nickel, any type of uh, good that requires extraction and the use of fuel oil for extracting it. It's not, I don't mean that you pour fuel oil into the ground and you will get gold that floats out, but you definitely need fuel oil to crush stones, to run your diggers, and it will cost money. And usually that's typically one of the larger costs for miners is fuel. Fuel is a running cost, and it's and if it starts getting really expensive, then sometimes they have to stop operations. Anyways, this is Dave. If you like the content, click the like button, subscribe so you can stay up to date on stuff I post. And thank you very much for watching. Dave out.